investors and welcome back to the channel. I am Mitali Dhoke here to simplify mutual fund investing and guide you on a smarter wealth creation journey. As we approach 2026, the equity markets continue to weave the story of two realities: robust domestic growth on one side and lingering global uncertainties on the other. While India's economy is among the fastest growing in the world, supported by robust consumption, manufacturing drive and infrastructure growth, volatility in global commodities, interest rate and geopolitical events still make waves in Indian equities. With so much volatility around, investors are beginning to understand that returns are not just about following momentum, they are as much about riding the right fund house that could navigate through turbulence with a research-driven, disciplined style. That's where ICICI Prudential Mutual Fund is differentiated with over 2 decades of experience in Indian market. The fund house itself is recognized for having a sound investment philosophy, deep research capabilities and risk-adjusted return orientation. It employs a consistent process-oriented approach that blends bottom-up stock selection with top-down macro view, a balance that becomes necessary when markets gyrate between optimism and caution. Whether it is handling co-diversified funds or thematic funds, ICICI Prudential's equity schemes have established a track record of navigating market cycles while fairly rewarding long-term investments. As we enter a year where quality, valuation, discipline and consistency will be more critical than ever, here are the top 3 equity schemes from ICICI Prudential Mutual Fund based on their 5-year rolling CAGR, judicious managerial vision, future-oriented allocation and fine-tuned risk management. Before we move on, please note this video is for information purpose only. It is not a mutual fund recommendation and should not be considered as such. There is no opinion or view on any schemes covered herein. First is the ICICI Prudential Dividend Yield Equity Fund, which reflect the fund house's fundamental emphasis on value, stability of income and long-term growth. The scheme seeks to invest in those companies that provide relatively high dividend yields coupled with sound fundamentals and healthy cash flows. Rather than pursuing high growth momentum stocks, the fund targets steady businesses which could produce consistent returns and reward shareholders in the form of dividends. In the last 5 years, the ICICI Prudential Dividend Yield Equity Fund has provided a rolling CAGR of approximately 30.39%, indicative of its steady compounding strategy rather than pursuing speculative gains. As of September 2025, the fund has an asset base of about Rs 57.79 billion, invested in approximately 77.7% in large caps, 6.8% in mid caps and 6.8% in small cap stocks. The largest holdings are ICICI Bank Limited 6.8%, NTPC at 6.1% and HDFC Bank Limited at 5.9%, which are all sectors with stable earnings and consistent dividend payout history. Sector exposure is diversified between bank 21.7%, automobile and ancillaries 10.5%, crude oil 9.6% and power 7.3%, balancing growth potential and income stability. This blend encapsulates the fund house's philosophy of gaining market growth while maintaining risk management and consistent performance. Second is the ICICI Prudential Value Fund. It follows a value investing strategy focusing on fundamentally sound companies that are short-term undervalued by the market. The fund attempts to find businesses with strong balance sheets, steady earnings and long-term growth prospects with the aim of providing superior risk-adjusted returns in the long term. Over the past 5 years, the fund has delivered a rolling CAGR of around 28%, highlighting its ability to uncover undervalued opportunities and benefit from market re-rating while minimizing downside risk. As of September 2025, the fund manages assets worth approximately 537.5 billion, with around 80.7% in large caps, 7.6% in mid caps and 3.3% exposure to small cap stocks. Key holdings include RIL at 7.4%, ICICI Bank Limited at 6.6% and HDFC Bank Limited at 6.3%. While sector positioning is spread across bank 22.9%, IT 11.5% and healthcare 10.9%. Supported by ICICI Prudential AMC's solid research-backed philosophy, the fund marries conviction with patience, taking a pick at businesses that are fundamentally good but tend to be ignored by the market. Third is the ICICI Prudential Large and Mid Cap Fund. This fund merges the stability of large caps with the potential for growth in mid caps, picking fundamentally good businesses with evident earnings growth. The fund seeks to provide consistent long-term wealth generation through a diversified portfolio while mitigating volatility across market cycles. Leveraging ICICI Prudential AMC's experience of nearly decades in managing large and mid-cap equities, the fund is strengthened by the house's capability to navigate market cycles and identify structural growth trends. In the last 5 years, the fund has provided a rolling CAGR of approximately 27.5%. reflecting its capability to harness growth opportunities in both large and mid-cap spaces while limiting downside risk through market correction. As of September 2025, the fund manages assets worth approximately Rs 236.9 billion, with around 47.1% in large caps, 36.5% in mid caps, and selective exposure of 11.7% to small cap stocks. The top stocks include Axis Bank as 5.3%, Maruti Suzuki 4.9%, and FSN E-Commerce Ventures Limited at 3.9%, showing a portfolio of good businesses at low prices. Sector positioning is spread across automobiles 18.5%, banking at 12.1%, and retail at 7.1%, showing a blend of defensives and cyclical ones. The fund is appropriate for long-term wealth creation by disciplined, fund house supported strategies with a balance of stability and growth potential. Now, coming to conclusion, ICICI Prudential's equity schemes could be considered for investing in India's volatile markets. Every fund aims at a specific opportunity, be it seizing growth in large and mid-cap stocks, unearthing undervalued companies, or providing stable dividend income. What is remarkable about these schemes is the linkage with a fund house that provides experience with responsive market insight. ICICI Prudential AMC utilizes the learnings of decades of experience in managing varied portfolios to develop strategies that react to changing economic and sectoral trends, with long-term goals always in sight. These schemes are not only wealth building tools but also instruments for constructing a structured, diversified equity portfolio over a period of time. So, if you found this video helpful, don't forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check our related videos and articles linked below. And if you are new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, invest wisely, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as IA with exchange, and certification from NISM is no way guarantee performance of the intermediary or provide an assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.